Welcome to the Insider's Insight podcast, where we share with you the thoughts of the individuals who are working for projects that are changing the world. Thank you to our sponsor, Creditcoin, the building blocks of trust. For more details, please visit the show notes below. Welcome to Insider's Insight. Today, I'm so pleased to have Billy from Xinfin. He is the Executive Director of the XDC Foundation, as well as being in charge of ecosystem development for Xinfin. Before we start the podcast, Billy, why don't you introduce your journey into crypto and maybe also tell our audience a little bit about what does Xinfin do and what is the XDC Network?
Sure. Well, thanks for having me, Sean. I got into crypto back in 2018, really after the initial drop in the market. And, I was really interested in a number of the, possibilities available with the utilities that are out there. And my background being in business and manufacturing consumer goods, I was importing and exporting. So I had found Xinfin Fintech back in May of that year, April or May of that year, I guess. And so I had seen that they really had a use case around trade finance, and I was really fascinated by that and, the financing gap for infrastructure with different countries globally, around really it was a real challenge. And I felt like they were really filling a need. So I just kind of really dove in, got involved with the project at a community level, and really just became ultimately a leader of the community and met the founders later that year and worked with a lot of community members together to really support the project over the years. And in February of 2021, I officially joined Xinfin Fintech as the head of ecosystem development. So I call it my 3-year interview. And, it's one of those things where I just got into it and loved it, loved supporting the project, found that the team was really, just had huge ambition and a very, really noble outlook on the world. And I really loved to be a part of that. So myself and a number of other community members really just since that time have really developed a team to support what Xinfin started.
Billy, if I could just interject, at the beginning, what drew you to crypto? Was there a philosophical moment that made you want to go into it, or was it just purely returns? And then how did you then navigate all of these coins to then end up finding Xinfin?
Well, I had actually, I guess to some degree, it's probably not different than a lot of other people at that time. I had actually been, looking into Bitcoin probably around 2014 or so. Didn't really give it too much thought at the time. I thought it was kind of interesting, but I really wasn't tied into really, the blockchain aspect of it. It just, to me, looked as a digital currency, which I thought had some potential future to it, but I didn't know what, and I really didn't look at it close enough. In the fall, when the run-up was happening with Bitcoin, obviously there were a lot of people that were paying attention to it, and I thought it was really fascinating to see where the market was going based on what it was when I had really started looking at it. And I had a friend who had actually gotten into a project and had, done really well, obviously, with that 2017 run-up. And I thought, well, it's really fascinating. I really felt after, kind of listening to him that I wanted to learn a lot more about what was just happening in crypto in general. And for me, I think really I looked at it at that point as I really felt like there was a real future to what was going on just with cryptocurrency in general. And, there were a lot of coins maybe that didn't really have much of a use case and others that did. And it was really not so easy to tell, I think, at the time, anything about what was really going to happen, because there was the ICO craze and people were jumping into projects without really even, having much behind it. I mean, I remember projects just taking off because they were launching websites. And so, I looked at it because of my experience in business that, for me, there had to be something real to it, or it wasn't really worth looking into. And so I looked for two things. things, and that was team and utility. What were you going to do with this coin, and why would it actually have utility and value? And so I looked at that initially from the investment perspective, and I found a number of different projects out there I thought were interesting. I mean, like many at the time too, there's probably a lot of projects that just have disappeared or are just really so off track with where they once started. I just today I go back to what they were doing at the time, and I dabbled with some, and I got into XRP at one point because I did see that there was a value in what you could do with transferring money quickly and inexpensively. And as a result of that, I had really kind of tripped over an article talking about XDCE, which was a ERC20 version of our XDC token that we had for a number of years as a one-to-one that you could swap. So the equal value one-to-one. And so I really just, like I said, with looking into XDC and what Xinfin had built, I was really fascinated by the use case, because had I had what we're doing today when I was in business years ago, it would have changed so much in the ability to be able to finance the needs of a manufacturing company or, importing product or so many other use cases that little things that happen within the process. And so I was really fascinated by it. So I just dove right in, and it's a value proposition at that point for me.
Billy, maybe you could run through a quick scenario where you felt Xinfin and XDC would have helped you in your previous career, because I think that would basically give a really strong overview as of why you joined Xinfin and why you think it's such a good project.
Sure. Well, I mean, with any small business, cash flow is king. And when you're in a business that requires you to purchase materials that tend to be about 30% of the cost of, really what you're doing, it takes a lot of capital in order to produce product. And so that's one of the things that a lot of manufacturing companies have. When you can purchase equipment if you have the collateral to purchase it, and if you need working capital, which is the cash to run the business on a daily basis, if you don't have that cash on hand, you need to be able to finance it, and you need to be able to turn it over quickly. And even in the U.S. where I am, that there's a lot of local banking that happens, and so you're really in a lot of cases at the time really limited to what banks were there in your region or locally within your state, and even more condensed might be where you are regionally in your state. So there's a limited amount of banks in which you can go to, and they all really pretty much operate the same. And so I think that with what you're looking at, what we're doing, the simple explanation of what the difference is that we're opening financing to a business anywhere in the world with essentially an investor anywhere in the world. You can now take the information that I had to give to a bank, back in the 90s to get a loan, and I could send that to somebody across the globe. They can see all of the documentation because it's digitized, it can be tokenized, loaded, or put on the blockchain, and it's immutable because it can't be changed. And so the opportunity for businesses to have the cash flow they need is just far, far easier for them with what we're building to be able to operate with. It gives them many, many more options. There's more competitive offers that would be out there. And I think that's really kind of the future of it. We're really working as to, how do you take what's happening off chain in those transactions and putting them on chain? But to me, that's really the solution, that's being offered. We're helping small businesses everywhere be able to finance the needs of their business so they can continue to produce product and grow. And, that's really the key to any business.
Billy, just to divert the conversation a little bit, I'm actually quite interested in the state of finance in the US, because I was watching a movie the other day and I was quite shocked that people were still using checkbooks. And I'm not sure if that's an accurate reflection of personal finances in America, but maybe you could shed some more light on this, because it does feel like a little bit outdated, especially when you compare it to, say, China, for example, where you basically make payments through your phone. Do you know what this current situation is in the States, and is Xinfin trying to help evolve that situation?
Well, I think that as far as the States States go, it's probably not much different than what you're seeing. I think the younger you are, the more you use your phone for transactions. So, I have a 19-year-old daughter and she uses Apple Pay or, some wallet on her phone in order to purchase. And, then you have people who have been, really kind of from the more traditional banking system, I'd say from 30, 40, 50 years ago, where they were writing checks on a regular basis and they just feel, it's what they know. They don't have a smartphone or, they may have one, but they don't want to get into that digitization of it. And, I think that, when you're older, when you're in your maybe 70s, late 70s, 80s or 90s, you do what you're used to doing. And I think you probably see that in most populations across the globe. I would think that's how it is as far as I see it. There's most people, I would say, pay bills online and use a debit card or their phone to purchase, be it groceries or, something in a store. But, the U.S. is a very debt-driven country. So you have consumers and businesses that, have accumulated a lot of debt as well as the government. And so it's one of those things that credit card culture is pretty strong. So I wouldn't say that there's too many people out there writing checks. I don't even know if I really have a checkbook myself at this point. You can always send it through your bank online, but most things I think people do are connect it to your bank and pay it automatically.
Okay, so it's quite similar to Europe. Do you think it's different state by state? Just so that our audience has an idea of what the state of finances are like in the States?
I think generally speaking, it's probably pretty similar across the board. I haven't experienced anything different when I travel from place to place. And, it's one of these things that whatever is available in New York is available in Florida or Texas or, Arizona or any other state in the country. So, businesses have, I would say this, there's a lot of technology that has been incorporated in the years here in the States, and it's very competitive, and all of the latest technology for point of sale, or online purchase is sold everywhere to everybody. So it's pretty consistent, I think, from place to place.
Do you think then the move towards a completely digital and crypto solution like Xinfin would be quite soundless and seamless in the States with the current situation there is right now?
Well, I think the way I would look at it is that, the use or the idea of using blockchain isn't necessarily saying to somebody, hey, we've got something completely different. It's called blockchain, and now we want you to use it instead of a more centralized data network that's out there right now. In a lot of cases, I think, MasterCard or other, large credit card, or card service companies that are out there, they have a pretty dynamic system already in place. And, I think that what you're likely to really see, and this is the way we view it, is how do we bring blockchain to those service providers so that, the things that people are used to doing now, like Apple Pay, is something that can be done on your phone and is incorporated in a way that everyone's used to. And so, we see debit cards coming out with cryptocurrency that can be used to back it. So you could load cryptocurrency onto, a specific debit card and, you're able to use it. And I think, the problem or challenge that we have here in the States is that, it's not very clear at all as to how these industries are going to be able to operate because, regulatory issues and just, the lack of clarity around that have made operating in the U.S. very difficult. So where a lot of U.S. based team members like myself are working to build our network, and that means exchange listings and market makers and all the different things, custody solutions, wallets or institutional custody, whatever it is. We're constantly bringing service providers on to help us build out the network ecosystem. And in most cases, we're not able to use those services because we're here in the States. So it's far easier, I think, if you're in Europe, Asia, and other parts of the world to operate, with crypto, debit cards and other solutions that are more normalized to, kind of like the everyday purchasing habits of people. But we're just not able to use those the same way here.
Moving on, I think it's really interesting what Xinfin is trying to solve. Obviously, obviously there are other solutions out there like Solana, Ethereum, Avalanche, etc. What do you think XDC is bringing to the table that these other chains are not?
Well, I think, for one, I think it's important that, when you're looking at what's happening, I think within the crypto space, we're seeing a lot of layer one protocols really starting to, have the proliferation of dApps on chain. And, some are really, really focused towards DeFi and others are, maybe focused towards, other applications, or just maybe there's just a broad spectrum of applications that are being developed on a lot of these chains. For us, we're a smart contracts platform. We've largely focused on trade finance and creating, a smart contracts tokenization platform, which has enabled the small businesses to do exactly what we've been talking about, which is get financing on chain. And we've, really created the first tokenized NFT on chain of trade assets, by taking a group of businesses and financing receivable invoicing for them. So, we did that back in September is when we did our first tokenization, and, we've continued to do that since. And it's a strong need. Trade finance is one of the most stable assets, that you're going to find out there. It's investing in it is inflation proof or resistant. And, the opportunity to have a stable return on it is very strong. And so this is an area that we feel really needs to be developed. And, we're talking trillions of dollars that really, have the ability to be brought on chain and be brought on chain in a way that can reduce, fraud, errors, mitigate risk, and speed up the process. And so that's what we've largely focused on. But one thing that we are is, we're EVM compatible and we're a smart contracts platform. And that means that really any dApp can launch on our blockchain. If somebody was on Ethereum and they were tired of the high fees, they could very easily port over to our network, launch their token there, and really operate at thousands of transactions a second with really near zero fees. And so, we feel that the speed and then scalability of the network are a real opportunity for, these applications to really port over. And so, at this point, we're starting to see a real proliferation of that. And so I think, one of the current opportunities, for us is that, we're at a little bit of a different stage when, you're looking at Solana as an example. They're a more mature ecosystem that has developed, they are earlier than we have. We're really, launched later than some of these other chains. And we hadn't focused on that type of ecosystem. And so it was always part of our plan to develop it more and more. What we're doing with trade finance is really just one example of a dApp or, that can be running on chain. And so, now I think the real opportunity is for developers to be able to come to the network. We have a lot of needs that we're looking at meeting as far as applications go. And so we have opportunities for developers to come in and earn, bounty. We have a grant program for development. And, there's a real, I think for projects themselves, the opportunity is you can be a big fish in a small pond. And we really work to help projects develop on chain. But, on the retail side, I know everyone's always looking at, where, what projects are important to them. And I think that, you're looking at a ecosystem that's really just starting to develop very rapidly. And so, we're really excited about it. I think, the opportunity for, blockchain in general to come together, interoperate, and, create something more cohesive as we move forward, I think is really there. And so, we've got an NFT marketplace as an example, which we're launching this coming quarter. It's unlike any marketplace that's currently out there. It's really, really driven by video and has been developed with the eye toward helping creators, content creators, and brands, work together to really create value for each other. And so,
I think it's very compelling that you're bringing the traditional finance space into the blockchain, and I think it's going to unlock a lot of possibilities with what an investor can do with all of that real world income stream. I was just wondering, do you guys have a vision of how this could evolve. I know that DeFi has evolved very quickly. We've gone from DeFi 1.0, which probably would be defined by money lending markets such as Aave, and also liquidity pool farming with AMMs like Uniswap, etc. And now we have DeFi 2.0 with Olympus DAO, Time, Wonderland, Abracadabra, TokenMac, etc., etc. Do you think that we're going to see real financial innovation when we bring all of these trade financing NFTs in on-chain? And how do you envision that would occur?
Yeah, it's a really good question. I think looking into the future and trying to figure out how it's all going to unfold is a really tricky proposition. The thing that I really always look at is that, the financial system as it is today isn't just going away, and I think, a good example is, and this is something that Atul Kikade, one of the Xinfin founders, would talk about, that, we used to send everything by mail, and then email came out. And when email came out, people were saying, oh, mail is going to go away. But, we're still sending mail, and we have been for the 25 years since, or whatever it is, since email first came out. And so I think that, that you're going to see that with the financial system. Nothing is going away. It's more a matter of how can you take what's been happening in a regulated environment off chain, and how can you incorporate it into a regulatory environment that it can operate clearly and legally under jurisdictions across the globe in a digitized manner. And so, there's a lot of laws out there that have made this very difficult and cumbersome from region to region. And there's, work that's being done in order to, create standards globally around it. And I think that you're going to see the development of these standards happening, and you're going to see more and more countries out there and jurisdictions just kind of paving the way for how this can work within the system. And I think you're going to find that the long-term projects that are out there, or the projects that are successful long-term, are going to be the ones that really understand they need to operate within these jurisdictions. And, you can't just have something that's not sustainable. You can't just come out with a, earn 35% year over year. It's not a sustainable system the way it's currently set up, because a lot of DeFi that happens on chains has to do with, minting more tokens and giving them away as a return, as opposed to more traditional, borrowing and lending. There's inherent value to the borrowing and the lending. And I think, you see those platforms that are doing that being very successful. And, I had a conversation with somebody about it today, which is the basis of what's happening for DeFi solutions ultimately comes down to that. You have to have the lending. You have to have people that are borrowing, and you have to have the people who are lending. And, it's the foundation of how, money has been made for years and years. So I think that's really, it's probably a boring answer, but the reality of the situation is, that while new instruments may come out, it's really hard to see, in my mind, that you're going to have anything so groundbreaking that it's going to supplant what was. And that's not to say that it isn't there. There are plenty of people far smarter than me that can figure that out. But this is just really kind of what I see from the experience that I've been having here, in this space.
I think when we saw the financial meltdown in 2008, some people blamed the instruments like the mortgage-backed securities and the collateral debt obligations, etc., which were essentially these mortgages that were repackaged and then reclassified and then given to investors who were then investing but not really knowing what they were investing in. And the big issue with that was not the instruments themselves, but more the lack of transparency. So the way I'm seeing is, one of the things that XDC could do is, if it is able to bridge the real world with the crypto world and bring all of this financial data into the on-chain, therefore it's completely transparent. Maybe we then see products like mortgage-backed securities and all of these other financial derivatives actually get priced much more accurately, because both investor and and the originator can see all of the information forward. Whereas in the traditional banking space, it was a little bit of a scam, only not because of the instrument and the innovation that was happening, but because only one side had all the information whilst the other side didn't.
Yeah, and I think even at certain points, really, it became that no side actually had the information. I think that was the whole thing. You're really talking credit default swaps, and ultimately multiple people really kind of buying into the same thing at some point. And I think that that tied up trillions of dollars in value that really wasn't there. I do think that this is really where when you talk about maybe what the future has to hold. I think that this is really one of the greatest values of an NFT, where you can have a token that's unique in, and it's tied to something that has very unique properties to it. And it also shows ownership. You can't resell it multiple times. You can only sell it to the next person or, transfer the value of it to someone else. You can't transfer it to two people simultaneously, and so I think that that's one of the things that, meaning like you can't take an NFT and sell the same NFT to two people, and both, have the same ownership. It's just the reason why NFTs exist is for that's not happen. So I think that the real benefit to really the tokenization and what we're doing in our smart contracts platform, the tokenization that we're doing, is really something that can be created for any of these use cases. So, when you look at real estate, when you look at anything that requires ownership, there's tremendous opportunity to, bring this on chain and really, avert the future crisis where something like that, may happen. And so, I think what we have inherent now in our financial system is a different issue, which is that we're, I think probably have surpassed at this point $300 trillion in debt. I know we were close to it, I think, over the summer. And so, the question then becomes, how do you resolve that? And my hope would be there's a solution somewhere within cryptocurrency and, that there's a way to kind of help rebalance the system. But I don't know whether anybody can ever figure that out. But certainly the types of instruments that were being offered, I think can be offered more safely and transparently, like you say. I definitely agree with that.
Well, Billy, I'm extremely excited to see where XDC and Xinfin are going to go in the future. Before I get you to sign off, what are your thoughts about the next wave coming to crypto? We had DeFi, we had NFTs, we had metaverse, we had gaming, and some say they're still going on. What do you think is the next big thing that's going to hit the cryptoverse?
Right. Well, in some cases, many of these things are so big, I don't know whether anybody has really put their head around the metaverse or Web 3.0 or all these things. And we talk about it, and there are certainly things that are happening around it, but I think it's so nascent. It's really, anything we're doing is so difficult to really see how it would really truly come together. Somebody could guess at it and they may be right, but the truth is nobody actually knows any of this stuff, because it's the future and it hasn't happened yet. And so I really look at it as it's not necessarily, I'm not looking to some like really new thing coming out. The fact is that, if you just talk about Web 3.0 or if you're talking about NFTs or, there's so many areas that have now really just started to, and I guess I would say projects specifically that are really just starting to get these use cases, down where the first transactions are really happening and repeating and you're working towards what could be production. The real utility is being able to do these transactions repeatedly, with a growing volume and volume of or increased value of each of these transactions. So, we look at what we do as increasing the amount of transactions and the value of each transaction. And I think that that's really going to be really the true next wave to me is how are the advancements that we made in blockchain over the last year and a half, and specifically the last year for a lot of projects, how does that translate into what happens moving forward. Because I think if you look at NFTs, they're a $31 billion value, I think, at this point, roughly in the marketplace, which is still very small to a $2 trillion market cap. But the difference between where you are today and where you were 6 months ago in NFT value is in usage and the amount of users and people talking about it. It's just tremendous. And so that's just a first wave of what you're seeing there. The opportunity of what's to be done in NFTs, the true value hasn't even really been tapped into. So I think really, again, it may be just kind of a boring answer, but I think the reality is the next wave is going to have to do with how do these developments, how do these technologies that we put together really come together to actually solve the issues, the problems, the uses that needed to be solved. And I think, frankly, that's the most exciting thing that blockchain can do. So it's
perfect. Thank you, Billy. Just before we sign off, do you have any socials you want to shout out or any websites you would like to promote?
Yeah, that's a good question. We are, the XDC Foundation is, in the process of launching or, putting the development together on a new website for the community. And that's going to be something that I'd say look for that. That's something that is going to be coming together in the next couple of months. And there's a lot of new dApps and applications that are coming along with that. So we're really excited about that. I can't really say because they're still in development what they are specifically, but as far as go to this site or that site. But that's as much of probably a shout out as I probably give on that right now. And but we're really excited about it. Oh, Twitter handles look, there's a lot of people in the community who are out, on Twitter. We have Telegram groups as well. I couldn't really say off the top of my head which Twitter you should really follow. You can go to @Xinfin_official if you want to see what's happening with Xinfin itself. Other than that, outside in the community, I'd say look for people tweeting, XDC or we are XDC. You'll find all sorts of good information put out there by a lot of community members, within what we call the Xin fam.
Well, if that's the case, I think that's a good place to start. I'm going to put the Twitter of Xinfin_official in the show notes below. Thank you so much for joining this episode, and we will see you all next episode. Bye, guys.
Awesome. Thanks, Sean.
The Inside is Insight podcast is meant for informational purposes only and should not be considered as financial or investment advice. Nothing expressed in this podcast should be construed as a solicitation, recommendation, endorsement, or offer to buy or sell any financial products. Information expressed by the host or guest of this podcast does not necessarily reflect any views of our sponsors.